that towards the end of the trading session. But that's what's going on for the markets. Let's actually kickstart the show now by focusing on the markets and getting a conversation going. We have Rohit Srivastava, founder and strategist at Indiacharts.com, joining us now to take some questions. Rohit, thanks a lot for joining us. This is Pavitra. You know, like we were just talking about, we seem to have broken out of that tight range that we were consolidating in for so long. Your thoughts on this, and do you think that we can now sustain at these levels?
Yes, Pavitra, I think the worst is over. A lot of people have been probably waiting to hear that. But if we just look back a little bit, the biggest volatility that we saw was on this year's budget day. We made a low of 18,353. We made a high of 17,353 and a high of 17,972. And yesterday we've actually closed above the budget day high. So this is getting over all the negative sentiment that had built, around the entire Adani fiasco that we've seen. And I think the markets meaningfully discounted it. And it's history. Whatever may come out of this issue, history is that, whenever an event comes across which plays on the minds of everybody, to the extent where you start questioning even the India story, historically that has been at the end of bear markets. Now, the only difference this time is that maybe the market's not down 30% or something like that. But in terms of sentiment, it will look like this was the last shoe to drop, the last bad news for the markets. It's been absorbed. And that means we have a very clean and clear way forward now from here for the rest of 2024. So that's the good news.
Rohit, the previous swing high levels of 18,200, 18,250, do they act as formidable resistance levels for the index to move higher from here on? And what about the Nifty Bank?
So the Nifty Bank did not close above, say, 42,015, which was the budget day high. It has not yet done that. So that maybe we can even say, okay, we want that additional confirmation as well from the banking side. We do see positive momentum in some of the bank stocks. So I think it will eventually happen. But when it comes to resistances, yes, these are key levels where probably the market will pause, maybe for a day, maybe for two. But I don't think they will be levels which will hold you back for very long. I mean, apart from acting like a short-term resistance, eventually I think we are headed higher. That's what the bigger setup really is, which I'm trying to point out to, that we've discounted the worst. We've seen all the bad events. There's nothing new bad that can really come out from here, at least for the next 6 months. Even if you look at global cues, for example, the risk has been rising interest rates. So increasingly, the markets are trying to price in that at least rate hikes will slow down, because inflation data is going to continue to cool into June and into September of next year. So as that happens, and there are, of course, divergent moves that different central banks are taking around the world, which is keeping net global liquidity on the rise, which is probably why global equity markets have already moved up ahead of India. India was just facing its own issue, but now we should join the rest of the world in that direction. So that's the overall call.
That would be music to the bulls' ears, Rohit, if that indeed starts playing out. So tell us, what will take the market higher? I mean, so far this year, it's only been technology, though we've not done as well as the NASDAQ, but relatively speaking, I mean, tech has been the hot space. What else will join the party?
So apart from tech, I think metals should do so. We've seen the dollar index really fall back below 104. Why 104 was important is that we'd made a double top between 2017 and 2020. And as long as the DXY was below that, it was really stimulating the return of the commodity cycle. The spike above that created a lot of fear. Now we've gone below that. We've seen a recent bounce in the short term last 2-3 days. Again, if we are seeing resistance close to that level. So I think as long as we stay down there, it sparks the commodity cycle all over again. Now, most of the prices, for example, copper, aluminium, have bounced back from the lows. And what we'll watch out for is that rally resume. So I think if you just look at the short-term setup of the Nifty Metal Index, the bounce that we saw from the December low has retraced exactly 61% in the last 2-3 days. And so, and we can see that in individual stock names as well. Like I was watching Steel Authority, National Aluminium, all of them are at 61% retracement of the recent rally. So this is a very good level from where I would expect the metal space overall to resume its upward trend. So I think IT and metals, the worst performers of last year, are turning around to be, one of the better performers, for the year. But it won't be only around that. We spoke of banking. I think, banking stocks should also do well. Particular large caps have seen a rebound. I think Reliance has been one of the bigger underperformers of the last 2 years. We haven't seen it do much apart from, move up and down in this, 2,200, 3,000 kind of 2,800 range for, very long. I think, a large part of that may be done because the monthly volatility is really contracted to the lowest level that we have seen in the past, which means usually you get a directional move from here. Then you need to bet on which side that direction will really be. So I sense that there is a case for some of these large caps like Reliance, Bajaj Finance, etc., to really join the rally. And so that should also kick in. Any other sectors, I think apart from, oil, I think capital goods, which is continued to get support from the budget last year and this year. So the capex cycle continues to, move ahead. Capital goods sector should do well. So these are, I think, 4 broad sectors which I think will help the rally. I do see a pause short term in PSU stocks in general, which had done well, I think, in the last quarter of last year, even when the markets were dull. I think they will do well on a 1 year, 2 year basis because of the underlying value and the turnaround maybe in economic activity. But shorter term, PSU stocks, because they've done so well, and usually after the budget and there's too much betting on them during budget time, it can lead to a slightly longer consolidation, but eventually they should pick up too.
All right, got it. So you like banks, you like IT, you like some of the capital good names as well, and metals, which you've, of course, been bullish on for a very long time. Rohit, is there something that you're absolutely avoiding right now and you think just does not make for a good investment at this point?
So I think new age stocks, that was an attractive sector, all of which got listed last year. They are still looking like avoidable. Maybe they pick up with the market, but I'm not so sure. We don't have very clear setups in that entire group. If we put them together, as one group or one index, probably take time to see momentum come back there. So I think that is one segment that we can actually think of being away from.
Okay. Any thoughts on what we've seen in the pharmaceutical stocks? Many of them have reported weak numbers. We've seen the stock prices under pressure, whether it's Divi's, Lupin, Supriya, for instance. That's one of the recent listings, and that's been reporting weak numbers. What are the charts telling you on any of these pharmaceutical names? Any stock which stands out?
So over the last few months, we've been trying to push the idea that maybe in a weak market, pharma is a good place to be in. They haven't done well, but I sense they are bottoming out. But here's the flip side that when markets pick up, if they do what I'm saying, which is you start a good broad-based market rally, the pharma sector also tends to move up less than the rest because the money ends up chasing growth and other things versus defense, which is probably why it is possible that they'll move up more slowly than the rest of the market. But I do sense that the worst is over. We've seen, I think, post-pandemic, the rally that we saw during the pandemic, the pharma rally ended up peaking out very, very early in 2021. So it's actually been through a very prolonged corrective or dull phase, except for a few outperformers, I think, like Sun Pharma, which held out better than the others. Most of them went through a deep correction. We've seen that in Dr. Reddy, Cipla, all the big names which are in the index. And so, like I was saying, the pharma index may have done its worst, but they may be slow to pick up. That's my sense.
All right, got that, Rohit. Thank you very much for stopping by today and giving us some perspective. And of course, are you expecting the markets to go higher from here? I think a lot of people, the bulls especially, will really love the sound of that. Let's take a quick break on that note. We'll come back and put the spotlight on a lot of buzzing stocks that are active in today's action.